Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Gary Farber. Today, we're very fortunate to have with us Andrew Chin to discuss a certainly timely topic, artificial intelligence. Andrew is the Chief Artificial Intelligence Officer at AllianceBernstein, as well as he's a member of the firm's operating committee. Previously, he was the head of investment solutions and sciences at AllianceBernstein, as well as the firm's chief risk officer. Andrew, welcome to the Compound Insights podcast.
Gary, thank you for inviting me, and I'm happy to be here.
Yeah, Andrew, still sort of early days, but for artificial intelligence, it seems like. How has Alliance Bernstein's strategy developed and how has it evolved over time, would you say?
Yeah, look, it's actually funny that you say it's early days, right? Sometimes it feels like it's been with us forever, right? But from a organizational perspective, look, I think it's very important that people think about the strategy in the context of the firm's overall strategy. I think that's very important. What's the risk appetite for the firm? Is the AI strategy consistent with what the firm is trying to do? What is the role of humans and machines, right? So I think all those things need to be considered. In our case, we thought that it was important for humans to work with machines, right, and for machines to provide augmented intelligence, right. So we thought that was a very important ingredient for our program, right. 'Cause we wanted to make sure that we were pairing human expertise, human judgment with machine intelligence, right. So that combination is how we thought about it. Secondly, we wanted to make sure that these tools were solving real problems, right? Real problems for our investors, real problems for our clients, right? So without that, these are just tools, right? Fun and cool tools, but not really impactful tools, right? So make sure that they solve problems, right? And then, lastly, just in terms of just giving you like a sense of what our strategy is, I have four pillars. The first is really just focused on the problems, as I said, that really have impact, the problems that really make sense, right? So that's the first pillar. Second one is making sure that we have the foundational capabilities and tools that really empower the organization. Make sure you have a set of tools that can do that. The third pillar then is making sure your employees know how to use those tools, right? And really have the dexterity to empower themselves, to be more, to be more impactful in terms of their decision making. And then the last pillar, which is the fourth pillar, is really about doing all of this in a responsible way, right? These tools are quite powerful, but they can also be misused, right? So being thoughtful on being ethical, transparent, and things like that. You want to make sure you use these tools in a responsible way. So I would say those are the elements that really forms our AI strategy.
And given those elements, are there challenges or issues that need to be navigated as you fully deploy the strategy, whether it's technology or processes?
Yeah, certainly, certainly. I mean, this is not easy. I would say that the third pillar that I described around training, I think that's important, right? Even though we all use, like say, ChatGPT at home, that makes it a little easier to train employees at work, right? But having said that, there needs to be a variety of training specific to the roles that we all have. You might be an investor, you might be a salesperson. How do we train you to be very effective at using these tools in your particular role? So I think training is a big hurdle, and and making sure that you can scale this across the firm. All your employees need to have the dexterity they need, right? So I think that's one. Second is that these tools are not perfect, right? They still hallucinate, right? They sometimes make up answers. And for many of us, we expect these tools to be 100% correct, that they give us the right responses, the correct responses every single time. That is not the case today, right? So therefore, making sure that all of our employees feel accountable for the decision, for the responses that come in, right? And making sure they own those decisions. Now, having said that, from a technical side, you always obviously want to reduce the amount of hallucinations, right? And various methods can be used, which we can talk about if you like, but hallucinations is also very important. And then maybe the third one that I would point to is really around data connectors, which really means that for these tools to be really powerful, you want access to all of the data that you normally would use, right? So how do you build in the connectors from these tools to all of these databases or repositories so that you can then use these tools in the most effective way possible?
And you touched on it, the hallucinations, which has sort of been in the news a little bit also, I think.
Yeah.
How do you deal with those kind of things?
Yeah, yeah. It's yeah, we use a variety of techniques to mitigate hallucinations. I don't think it's possible to eliminate 100%. Usually when we ask for data in our organizations, we expect 100% accuracy. If I say, hey, what's the return for the broad market the last quarter? I mean, you expect the exact number. You don't want a made up number, right? So the way that we mitigate hallucination risk is, we have a few ways. One is to use RAG, retrieval augmented generation, to ground your responses. So, for example, if I have a set of documents I want the response to come back from, then I'm going to only look at those documents, right? So that method grounds the responses, right? That's one, and that's helpful. Two is, what you might do is you might use different models to ask the same question, or you may ask the same question 5 times. And if it comes back 5 times with the same response, it's more likely that the answer is, quote, accurate, right? So, or you may just take the majority vote, right? So those would be ways to mitigate the risk of hallucinations. The other thing that we do is that we have citations, or we have sources within our responses, right? So it says the answer is two, and the citation is here. You can click on it just to follow through and make sure that the answer is two if you want to check, right? So usually when these models have a citation, you improve the probability that it's an accurate response because it's sourcing it from somewhere, right? It didn't make it up somehow, right? So I would say those are some of the ways that they can mitigate the risk of hallucinations.
And so it sounds like as you get up the learning curve, and there are others who are sort of newer to deploying this at other firms, what would your advice be to those as they just sort of begin that process?
Yeah. Sometimes I always wish that I'm starting right now because then you have a blank sheet of paper, you have the latest tools, and it's actually kind of nice to use the tools right now. I started our strategy some years ago, so we have some stuff, that I have to course correct over time, right? But starting today, as I was saying before, I would first say, understand what your firm's risk appetite is, right? Like, what does your organization allow you to do, not allow you to do? Because that sets the tone for how you use these tools. Do you want to use them on the investment side? Do you want to use them on the client engagement side? Do you want an external facing chatbot? These are risk appetite, types of questions, right? So the firm has to set that strategy, right? So that's first. Have a clear risk appetite. And then secondly, that translates into governance. What sort of governance do you want to make sure that use cases are vetted, right? And that new tools and new techniques are being vetted appropriately. I think that part is important. So the firm has a good sense of what is out there in the organization. Next, I would say, you will want to make sure you attack the areas that are high impact, meaning that you really have questions there. That these are not just tools, that are fun to play with, right? That are cool to play with, but they really solve real problems, right? So I would think about those elements. I would try to give employees room to experiment. I think, as you said upfront, Gary, that we're still relatively new in the AI journey. And so therefore, we don't know all the responses, all the good answers yet, right? So let the employees experiment with these tools, whether it's on the investing side or the sales side, because in my world, I found that employees are a lot more creative and a lot more imaginative in the things that they come up with and the creative ways that these tools can help them in their particular roles, right? So having a strategy that allows experimentation, I think, is important.
What about return on investments? Obviously, been a headline lately in the news as far as stocks and will there be how profitable this kind of service will be. Are there particular metrics that you're using right now to sort of gauge productivity, new product introductions, or just new markets that you might get into based upon using this tool?
Yeah. Yeah, it's a great question, and there are some good ways to do it, but I would say we're still in the early stages. I think for most of us, I think the easiest one is adoption, right? How many of your employees are using it? How much are they using it, right? So I think though that's adoption. I think that's the easiest way. You can then take some of those metrics and try to translate them into things like hours saved or savings or things like that, right? So some of the vendors out there actually help you estimate these things, right? So if I'm using, for example, a Copilot to summarize an email or to write an email, typically how much time does that save? 5 minutes maybe? That's okay, all right? You can add all those 5 minutes up. You can multiply by that by some number to get an average savings, right? But so that's adoption rates. Translate that to to some sort of times saved, right? I would also say beyond that, you can we so those are productivity, types of impacts, right? I would then also focus on the other side, which is, do you make better decisions? Are you more effective with these tools, right? So how do you do that? On the investing side, it's all about performance and alpha, right? So we try to measure that. So our analysts, would say, you know what? When I used to do XYZ, it used to take me 2 weeks. Now it takes me whatever, 2 days, 15 minutes, doesn't really matter. And therefore, I'm able to make a decision faster. Because I made the decision faster, I bought or sold a stock today versus 2 weeks from now. I can measure that performance, right? To see if did I get some value because I invested in a stock earlier. And our teams have said the answer is yes. So they've been measuring that themselves and found that the impact is positive, that these tools have certainly impacted our alpha potential, right? So I think that's great, right? And then on the client side, you can ask sort of the same questions, right? Am I able to engage my clients better? Do I, do I have higher click-through rates, when I use some of these tools to try to engage with my clients, right? So we're also seeing positive results there. So I think those are, things you can do on the effectiveness side as well as the efficiency or productivity side.
I mean, do clients ask about this much in meetings? Do they ask, what is your strategy? Or do they look at it, or even just some other context, do they ask about it?
I'm the most popular person today, Gary. Everybody, everybody has questions around AI. I think for two reasons when speaking to us. One is how we're engaging with AI, how are we using it to really hopefully improve investment returns. But then secondly, I think our clients also want to understand how they can use these tools better in their own organizations, right? So I think they're coming from both perspectives, right? So yeah, so no, lots of questions on that. All of our clients want to understand, and I think that will continue, by the way, for the next at least the next year or so. The focus has been like Gen AI, right? But there's been a lot more press, as you likely know, around agentic AI, right? So we can talk more about that later if you like. But many more clients are asking about that to see if they can introduce these agents into the organizations.
Yeah, I mean, do you see a day where agents will be placing trades, rebalancing portfolios, and things like that with minimal human oversight, or is that very far out and needs to be tested significantly?
Yeah, my view is a latter view, which is I think is going to take a lot of time for any of these tools, to be used autonomously if we ever get there. And I think the big reason is because we have a fiduciary responsibility in our industry, as you know. And so from an investment perspective, we want to make sure that there is a human standing behind every single one of our trades, right? That we are accountable for each of the trades. Same thing on the client engagement side, right? I think our clients, in our experience, they want to talk to a person. They want to feel like, they are being tended to by an individual in an organization who understands our firm, right? So I think those elements are important. Now, so that would imply to me that we need a human in the loop, right? And so anyway, so I do believe that, and I'm structuring all of our processes to include that to make sure there is a human in the loop. But even when you have a human in the loop, there are different ways that you can model that, right? One is you can say, well, I can use these tools, simply to give me insight. I'm going to summarize, I'm going to synthesize, I'm going to extract features or something like that. That's like insight. I'm using these tools to gain insight into something, which is great. You can also use these tools, by the way, to like interact, right? You can have these tools to say, hey, Gary, I recommend trade X, and here's the reason why. And then you can choose to say yes or no, right? And so you're using these tools. In my latter example, you're using the tools to do more. It's suggesting a trade for you. It's suggesting an action for you. But you can still choose to say yes or no, right? So firms we have to figure out, are they more comfortable with the insight example, or are they more comfortable with the interaction example that I gave, where they can then, give in feedback and then decide what they want to do, right? So I think those are choices that the firms can make.
What about, Andrew, in constructing the investment mosaic? Is there a particular part of the process, analytical, thesis building, that do you think the tools that we have today are best suited?
Yeah, I actually have a lot of views on at this point, but the basic idea here is I think these tools are going to remake investment research. I think it's going to change how we do investment research. So let me explain that. So first, as you likely know, I mean, in our industry, we've traditionally had camps of discretionary managers and systematic managers. I think these tools are going to expand the breadth for discretionary managers. So as you know, discretionary managers, what they're really good at is analyzing a subset of companies really, really well. They understand all the nuances about those companies. But the difficulty is how to expand that depth of insight across many more companies, right? So I think that's what these tools give them. It gives them breadth to cover their securities across more companies. So then we move to the systematic side. I think it's the opposite. So today, systematic investors have breadth. They can look at all 500 companies in the S&P 500, but they lack like intuition, nuance, and depth into each of the companies. These tools can do that. They can say, I'm going to look at management calls, I'm going to look at management presentations to understand things like deception, management quality, tone, and things like that, right? So now these systematic managers suddenly have a lot more depth, right? So I think that's what's happening, right? So and because of that, I would expect discretionary and systematic disciplines to become a single person, right? So it's not we've talked about like quantum mental in our industry. This is not quantum mental to me. Quantum mental is still separate teams, separate people, but a PM pulls the two together. That's still great. But I think where we're headed is that it's the same person actually doing both of them because these tools give breadth for the discretionary side and depth for the systematic side. So I think that changes the picture in terms of what the future investor looks like.
And does it have applicability yet? Have you seen particular sectors like healthcare or technology or others where, wow, this tool has really been very strong, or it's sort of broad-based at this
Yeah,
point?
yeah. Yeah, I would say, look, these tools are like they excel at looking at unstructured and qualitative data, right? So any industry which has a lot of that stuff, these tools can do well. So the first one that comes to mind is definitely like consumer sectors, consumer discretionary as an example, right? You can find out so much information about product reviews, consumer, feedback, things like that, right? Foot traffic, things like that. Lots of unstructured data out there that you can glean and you can synthesize, to hopefully make better investment decisions on the consumer side. So I think that's definitely one area. I think just technology and the healthcare, would be other areas, right, where these tools can potentially have impact in remaking what those industries and what those companies in those industries look like, right? So I think we've seen like early success stories there, but I would expect these tools to have a lot of impact in those industries.
And if everyone's, all firms are sort of deploying this technology, is there a risk that there could be some kind of bigger consensus basically around investing, that everyone's using the same tools, they sort of reach a similar conclusion, and the consensus becomes bigger?
Yeah, yeah. Look, I think there's always the risk of systemic risk, right? We've had factors, for example, like value, momentum, for decades, right? But as you know, we still use those, right? Why do we still use them? Because they still work, and we customize each of those factors in a proprietary way, right? So we customize value, we customize momentum to the way that we think it should work, right? So even though we all use value as an example, we all do it slightly differently, right? So I think that will be true as we use large language models. Each of us, the way we're going to customize these tools is that we're going to either prompt differently or we're going to fine tune differently, right? And both of those are going to emanate from your investment philosophy and your values, right? How do you do research? How do you look at companies? What do you consider important? Each of us looks at that in a slightly different way. So I would suspect that in the same way, we're going to use these tools a little differently, right? So I think that's going to mitigate the risk of systemic risk, right? So that's what I would say. Having said that, if you're in a market which is largely dominated by retail, let's say, then I think there's a higher risk of that, right? Because you can say in a retail market, we may all say, "Hey, ChatGPT, what do you think about stock X? And should we all sell?" Right? And yes, I think in that instance, there's more of that risk. I think in the US, which is largely institutional, as you know, I think the risk is lower, but we need to pay attention, right? And we do need to monitor that, right? The same way that we monitor crowding in value, crowding in momentum, it's the same way. Are there ways that we can monitor crowding in certain outputs of LMs, right? So we will learn to do that over time. But I think those are some of the things that we will need to look for, as we use these tools more.
From a talent perspective, what skills do you think will be most helpful for investment professionals to have as AI becomes more integrated into everyday workflows? It's been a big topic of discussion. Some say, it's going to displace people. Some say it won't displace people who know how to use it. I mean, where do you come out on that?
Look, I mean, I think the skills that are most important are, I would say, it remains domain expertise, right? You must know how the markets operate. You must know, how to look at companies, right? And so that domain expertise is critical. Secondly, I would say that you need to have some fluency with these quantitative and analytical tools, right? You need to know when these tools are going to make assumptions that don't make sense, right? When may they be wrong? When did they miss turning points, right? So fluency with quantitative models is going to be important. And I'm not saying you need to know how to estimate a model, but you need to understand what assumptions are being made and how they're calibrated. Third is, really being able to use these tools in a human AI way, right? So how do you use these tools in a constructive way, right? So I think that's important, and so that's about learning these tools, and how to get the best out of these tools. And last thing that I would say is this idea of being able to learn, right? So when I graduated, Gary, like many years ago, and I thought that when I came out of school, I learned everything I needed to know, and now I'm going to be great, right? But now with these tools, it's actually a lot easier for a new graduate to close the gap on me quickly, right? Because they can just basically use a large language model and learn a lot of the stuff that I learned over the years. So that means for someone like me, I have to continue to learn, right? I have to learn to use these tools. I have to learn new techniques. And so I think getting into that mode where, we're pretty much every day we're in college, right? And learning to learn new things will continue to, I hopefully I'll be able to maintain my edge going forward that way, right? So I think those are the competencies that are important for investment professionals.
And does that mean, as a firm, you've enhanced your level of sort of continuing education for professionals to sort of better learn how to use these tools?
Definitely. Yeah, definitely. I mean, the simplest thing is around prompt engineering, right? How do we ask these tools, provide better context to the questions that we have so that we get better responses back? Lots of training around that, right? But even for our, for everyone, there's a lot of demand, for learning how to use these tools better, right? Not beyond prompting, right? So lots of interest in that, right? So not only so there's certainly more demand, right? So firms like us, people like me, have to think through like what's the right sort of training for these folks. On the prompting side, I found that if I teach someone, how to do prompting, it's okay, but what really helps is when one of their colleagues show them a prompt or show them a use case that really resonates with them, right? Because then they can see in a practical way, oh, that's how my fellow salesperson does this. I get it now. I can now use it for myself, right? Same thing for an investor, right? So it has to be like very tangible use case specific training that's needed. And then the other sort of training is really about some of the hurdles that we discussed and some of the challenges in using these tools, right? Whether it's around responsible use, hallucinations, automation bias, things like that. You want to make sure that we know how to use these tools well and treat them as tools, by the way. I mean, they are, they don't replace our judgment, our intuition, our experience.
And you have a significant background in risk, Andrew. I'm just wondering how helpful is this tool to managing risk? Because obviously the stock market can be highly volatile.
Yeah, it's a good point. Yeah, it's sometimes strange when I tell people that my experience includes being CRO for the firm, right? But actually on our side, it was a very conscious decision because these tools, while very powerful, they also have risks, right? So I think that having that background actually certainly helped us in terms of how it shaped our strategy, right? Using these tools, hopefully in a good way, but in a responsible way, right? But just in terms of how we use these tools for risk management, you're definitely spot on that there are applications there, right? So whether it's in like trying to understand turning points, coming up with alerts, using this for synthetic data generation, which means basically trying to use these tools to create fake real data so that makes our scenario analysis and our stress testing more robust, right? Because if we think about a period like COVID, hopefully that's the last COVID we ever see, but but if you want to calibrate and test your models in a period like that, you don't have many live experiences, right? So you might use these tools to say, hey, I want to simulate XYZ. I want to simulate another pandemic, let's say, what that looks like. And so that makes your stress testing and your scenario analysis hopefully more robust, right? So I see many more applications here on the risk side. I think we're just at the start of it.
And we've touched on a lot of topics so far, and it's always in the news every day, artificial intelligence. But do you think there's still some sort of misperceptions or aspects that are not fully appreciated or sort of, just sort of out there that people don't have the view that they should have on this product?
Uh, yeah, look, I think many of us still view these tools as assistants, like they summarize my email or something like that, right? They are good for that. But I usually like to say that I would encourage all of us to use these as thought partners, even, right? That they're very powerful, right? If you can ask them questions about a certain stock, a certain portfolio, a certain strategy, and it comes back with thoughtful responses. I'm not saying you should use it just out of the box, but it's a good way to just give you like a different perspective and stress your thinking, right? So using these tools, as a thought partner, not just an assistant, is one. Secondly, I would say I talked a bit about hallucinations and how they're not necessarily good, but actually they can be good sometimes, right? And let me give you two examples where they might be good. So when you're searching for new ideas, for out of the box thinking, some hallucination might be good because they'll give you some ideas that is never thought of or I might not have thought of, right? So I think that's one example. Another example where I found hallucinations to be pretty good is when you're missing data, right? As researchers, when you look back in the past to collect historical data, inevitably you're not going to have data for some periods or some assets or something like that. Usually, to estimate a model, you would say, well, I got to throw away that data because I'm missing data. Well, you know, these tools can actually make up data for those periods that may be sensible, right? You have to think about whether they're sensible or not, but these tools can create that fake data for you so that you can say, oh, that's great. And one way to get there is through hallucinations.
And what about capacity? Do you look sort of down the road there and say, do we have enough data centers? Do we have enough capacity coming along? Does that factor in to your expectations for AI?
Yeah, there's so much capacity coming online, right? I think the hyperscalers are imagining like many, 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 many more use cases for all of us. And I certainly see a lot more use cases within a firm like ours, and we would definitely use these tools a lot more. But I don't know if all that capacity is needed for all of the world's problems, right? But just for us, certainly capacity will increase. And because as I think about its uses across the firm, whether it's investing or clients, operations, yeah, there certainly are many more, right? So I do see that potential there. I would also say that aside from you know, from the from the data centers, there are other things that needs to be created for our industry. Things like explainability, right? I mean, right now we just say, hey, does a model do this? Can it do that? That's great. But for us to really trust these models and use these models, we need better tools around explainability and transparency, so we can all trust these tools as we work through them, right? So I think that sort of stuff needs to be created in addition to the infrastructure that we think we need.
And finally, if we look out several years here, will investment firms operate or look much different because of AI? And will there be things that we didn't think about today will be surprises down the road?
Look, I mean, honestly, I do think that the shape of investment research will be different. I think because of these tools, the future investor is going to look different. And I usually use like the Iron Person analogy, Iron Man, Iron Person analogy. Smart subject matter expert inside, but surrounded by armor that hopefully gives them fast and quick synthesis. So I think that's what the future successful investor looks like going forward. And in that world, a researcher may not, be the one doing all the dirty work in terms of collecting data, creating Excel spreadsheets, and then doing draft memos. I think the analyst, the top analyst, becomes more like a curator of intelligence, right? They decide where's the intelligence coming from, how do they interact, and what should I feed into the machine, what should I give back to the human. I think that's a curator of intelligence, rather than someone who's like, dig diving into research, let's say, right? So I think the role of the investor changes over time to becoming more like a curator of intelligence and be able to use human judgment and machine intelligence at the same time to hopefully make better investment decisions.
Andrew, thank you for joining us today, sharing your perspective and valuable insights. And to our listeners, thank you for tuning into Compound Insights from CFA Society New York. I'm Gary Farber, and we look forward to bringing you more conversations with leading voices in finance.